Hello, let's go through displacements and why I did what I did in the middle of the day. Hopefully you'll see it with more clarity, and I want to make sure that people learn how to trade first and foremost before we get deeper into the rabbit hole around what it is we want to buy and when we want to buy it, right? So let's just go find when I said we're going to dump. So I said this in the paid chat. I didn't post this in the SPX channel because I was, looking for an entry rather than, trying to figure out what it is that I want to say. I just want to make sure that we found the right entry at the right time. So I said at 12:39 p.m. You can see this, right? Let's do this. Going to dump here. I said 90% sure. 12:39 p.m. That this is going to dump, and guess what? We got that dump. But the reason I said that this was going to dump wasn't because I was like, oh, I'm bearish or whatever, or like the trend has changed to the downside. No, not at all. The trend was very much intact to the upside, but when I see these wicks and these rejections at a key level like 7,000, where we know that there was a lot of gamma exposure all day and all week, frankly, and we were rejecting from that area, I know that either market makers don't have enough liquidity to go higher, or there's going to be a news event that sends us lower, right? And so I was like, we're going to go back to 6987. And the reason I said 6987 is because there's a level here. So if I look at the middle in this displacement area, right in the middle is 6987, right? So this is my call entry. That's really what I was looking for. And so I posted this in the SPX channel when I found the entry, and you'll see this because I'm as transparent as I can be with you guys here. I was saying, hey, I want to get the 7,000 strike. Let me just go find it. Holding that, yes. Watching for an entry on calls. And I said, hey, I'm looking for an entry on 7,000C. Trying to get it at $380 per contract. I think the lowest he's went to was $300. But the reason I want to get these calls in the first place is because I know they don't have enough liquidity to go up here. We knew that market makers had a huge position of like 30 or 40 or $60 billion, whatever it was, in the middle of the day. And I was like, look, they don't have enough liquidity to go up. You're likely to come back into the middle of this displacement. If that holds, which I knew was going to hold with 100% confidence because this level held, we ended up getting this move up, and we know that gamma exposure was lit up on the upside all day, that we were going to hold this level, right? So I got these at $380 and they expired in the money of like $2,400 or whatever that was. So I'm glad we got the fill there, and that's the reason I did it, was because I knew that there was not enough liquidity to go higher. I knew that we're going to come back down around this area, if not even lower, maybe in this area to go and grab liquidity before going much higher. And what I was saying afterwards was like, hey, watch this explosive move up here because they have the liquidity now to go get there, right? And the way that my mind works is like you're either looking at internal liquidity or external liquidity. External liquidity is how do I stop out a bunch of retail investors or maybe even other institutions. So whoever went long here, I'm going to stop them out. You see that clearly, right? Anything in the red here is your stop loss. And anyone who went long around here, I want to stop them out as well, right? And so like if I'm a market maker and I'm trying to grab liquidity to go higher or lower, it doesn't really matter which way. I'm going to rate as much liquidity as possible by hunting stop losses on retail or other institutions. And so this is the reason I chose this displacement area. If that held, I was going to get more calls. And ultimately, that was the right call, I think, because we ended up displacing here, held us in balance, this displacement zone, and going higher and higher and higher, right? And so I was right. We peaked at 35% in like 20 minutes. And then these went to like 300%, if I remember right. Let me just find the screenshot, 336%, and they expired in the money. So that's the reason I took those in the first place, was because I knew we were going to hold. I knew that they didn't have the liquidity to go higher, otherwise we would have gone there already. And that the dealer positioning was towards 7,000 literally all day. So that's why I did what I did. And this is a classic pattern because understanding how markets behave and work fundamentally is what's made me a successful trader. And so I know whenever I see this pattern, this is a classic undercut. You hold this displacement area and then you go higher, right? We've seen this time and time again. I can't go through like how many examples I have of this, and we'll find a random one from maybe here. What happens? You come back into the 50% into this displacement, you hold this, you undercut, you go higher, right? That's just how markets work. And we've gone over this time and time again. Above the 50% of any displacement, market makers and institutions, and even other retail investors and traders are what? Net buyers. So what happens? They buy it up. If you close below this, you're what? Net sellers, you go down, right? And so let's go find an example of a candle where we knew that institutions and other retail investors or even other market makers were net sellers, right? So here you have a displacement. We didn't close above 50%. And what happens? You get net sellers, right? You go from this displacement to the middle of this displacement and then maybe even below that, right? So that's how I trade, and that's how my mind works, and that's why I took what I did, took those 7,000 calls at $380. Was because I knew that they needed to grab liquidity to go higher and higher and higher, right? And so I'm glad that it worked out. It doesn't always work, by the way. It maybe has like a 90% win rate, which I know is insane. Like it's still pretty profitable for the most part. But they could have just as easily let this close below and kind of come back down towards the lower areas, right? But the thing that gave me confidence was the gamma exposure at 7,000, the undercut, and this displacement area holding, right? And I know there's a bunch of people in calls, and I know for a fact there's a bunch of people in puts, and at this point in time, I had zero interest in that because the trend was higher. And the reason I know the trend was higher, if I draw a simple rectangle around the opening range, the first 15 minutes, what happens? Anything above this, you're in an uptrend. Anything below this, you're in a downtrend. And guess what? We came right into the middle of this opening range breakout, right in the middle. And guess what? We bounced exactly from there, right? We had multiple points of confluence and conviction that you're going to go higher. It was just a matter of time. And when I saw that undercut happen in real time, I got those calls at a steep discount compared to where they were like 20 minutes before then. And they expired in the money. So you want return $380 or $300 if you got a better fill into $2,400, almost 10x there. So that's how I trade, and that's how I knew that we were going to go much higher than where we were. It's because of the undercut and this displacement area holding. Hopefully that's clear to everyone. If you have questions, let me know. Otherwise, chat soon.